European and US stock indices were sharply lower first thing, but we are seeing a bit of a bounce now. Want to know more? Keep watching. Hello, I'm David and this is Trading Today. Overnight we saw further weakness across US stock indices. The Dow ended the session down 0.3%. The S&P was down 1.4%. But the NASDAQ was down 2.4%. A lot of those losses due to Alphabet, the parent company of Google and YouTube, which really disappointed investors when it came to its revenues from cloud computing. The stock ended the session down 9.5%. Sell-off continued today. We heard overnight from Meta Platforms, formerly Facebook, some brilliant figures, really strong revenue growth, up 23% quarter on quarter. But the company warned about a fall-off in ad revenue for the fourth quarter, blaming the geopolitical tensions and general uncertainty, and the stock fell about 4% first thing. In fact, there was weakness right the way across the tech sector, and that's hardly surprising when you consider that bond yields, once again, we had a bit of a relief first thing this week when they fell. The 10-year yield fell back from 5% threshold down to 4.8, but they are back up again, threatening that 5% level, just a little bit below that as we speak. That, of course, very bad for tech stocks. These are the stocks which are growth stocks. So in other words, people borrow now to invest in the stocks, and the companies borrow now to invest for future growth. If borrowing costs are going up, that's not great for the sector, and that's why we're seeing this sort of bit of a sell-off led by tech, pretty much reminiscent of what happened in the first 9 months of 2022. Now, an awful lot has happened today. We've just had the latest update, the advanced GDP number for the third quarter from the US came in at a stonking plus 4.9%. It was expected to come in at plus 4.5%, and even that, as you can feel, that was a very, very big figure, a very large figure for growth in the US when you consider how tepid it is elsewhere in the world. So we've beaten on that, and we are seeing a bit of a bounce back in stock indices on the back of that news, and the fact that unemployment claims, although it's only weekly, but nevertheless they ticked up slightly as well. So there's some interesting news on that. Now, we've got Amazon reporting after the close tonight. We do have a host of other companies that we should be hearing from throughout the day, including MasterCard, Merck, Intel, Altria, Chipotle, and Northrop Grumman, and UPS as well. We also heard from the ECB. The ECB left its minimum bid rate, its key interest rate, unchanged at 4.5%. This is the first time for 10 consecutive sessions it has raised rates. This is the first time it has paused. Hardly a surprise given the fact that although inflation is still well above its below 2% target, you're seeing real softness in the economic data from across the Eurozone, in particular Germany. Those are very poor PMI figures that we saw at the beginning of the week. And really, the whole fact that the ECB is also perhaps looking at increasing its rate of quantitative tightening is not going to happen when you consider how weak the bond market is at the moment. So they've kept rates on hold. Inflation did come down nicely over the last month, but I think it's the economic conditions which have persuaded them not to hike rates this time round. Thank you very much for watching. I hope you found this of interest. If you did, please like and follow, and best of luck with your trading. Goodbye.